All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for all of you being with me here on this Thursday morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in the Forex market. So, without further ado, as always, let's make sure we turn off any and all distractions, grab a pen and paper, take take lots of notes, and let's make sure that we participate and engage. You all have been doing an amazing job of doing that. You all are getting it, right? So if everybody's all set and ready to go for this morning's session, do me a huge favor, drop me a one in the chat. Let me know you can hear me loud and clear. All right. Panay, JC. All right. Crew is here. Reese. All right. I appreciate it. Good morning to everybody. Let me make sure everybody has control over their microphone. Okay. So, yeah, lots and lots and lots going on. I had posted in the Discord last night about the situation in China, which has really created a lot of concerns, a lot of risk aversion right now that we're seeing in the market in regards to China. Nothing here right now on the trading economics page, but what happened is you had one of the large major banks, the shadow bank in China, missing payments, right? Um, one of their uh, major real estate developers um, reported losses of $1 billion in losses. That's just one of them. There's two, right? So that was. Let me go back to the Discord and the notes for people that might have missed it. Let me see. We can. We'll let that load up for a second. But here, when I put last night, it's saying that, ladies and gentlemen, we have trouble brewing in China. China's shadow bank recently missed a bunch of payments. Hold on one second. Let me. Can everybody see my screen? Mine just blanked out for a minute. Yes, no. Let me. Hold on. Yes. Okay. All right. You see the Discord or no? No. Okay. So hold on one second. Let me do a new share. There we go. Now I think we're good. So just said we have, can everybody see it now? I want to make sure. Got my screen switched over, right? All right, we're good. So just said we have trouble brewing in China. China's shadow bank recently missed a bunch of payments. And one of China's largest real estate developers, Country Garden, reported $1 billion worth of losses. And they're basically at the brink of default, right? And so that's just one of their real estate developers. There's actually two major ones. The other one is Evergrande, which if you guys remember that name from a while ago. Was it last year, right? They were having issues, but having issues again. China has responded with interest rate cuts due to their concerns about their economy. The Chinese yuan sunk to its lowest levels this year. I think this risk-off scenario may deepen because I think we are only seeing the very beginning of what could be a bad situation in China. So I said last night, if you look at your charts, you can see your commodity currencies are declining and you see downward pressure impacting the stock market. Safe haven currencies have gained some strength. And we may see gold eventually, we may eventually see gold, put that wrong, start pushing long. And then I just said fundamentals matter. And when in doubt, stay out. So our number one job is to preserve capital. So that was just a quick note last night, things I was reading before. Bit for the evening last night. So lots going on, right? That is the world's second largest economy. We've been talking about that. We've been watching China closely. For example, JP Morgan Chase coming into 2023 had an expected GDP growth for China. They were expecting 6.4% growth. JP Morgan Chase has now downgraded that projection to 4%, right? So we're having some issues in China. Okay, we can see also here Japan exports fall for the first time in 29 months, right? So we're seeing a decline in exports out of Japan. That signals weaker demand. All right. So some things we've got to trade through and navigate through, but it's all good. We see under what circumstances could the DXY and gold be bullish at the same time? Situations like this, right now. So since you bring up the DXY, right now you can see global bond yields are starting to rise. Look at the 10-year bond yield there, right? So that's attractive, right? That's attractive. So it's up to 4.3%. So you can see here that it pushed up and took out a high, right? When we look at bonds, the 10-year bond from a technical perspective on the daily chart. So that's surging right now due to a lot of the concerns. And we'll talk more about that here in a second about, in addition to what's going on in China, right? So uncertainty, fear, right, can cause that to rise. So it just, right now, it's attractive to go into that dollar, right? Because of the bond yields. You can get 4.3%. What are you really getting on gold? Right? If you notice gold doesn't have a yield. There's no interest there. Right? So right now, the bonds, the US 10-year is very attractive. As you see it surging. It's continuing to move up, right? As we watch it here on the charts. Because if I can move my money out of riskier assets like stocks, okay, and we it's been back and forth, so we have to wait and see. We know that the stock market has been rallying, okay. These type of environments just make it tougher. You have things like what's going on in China make it tougher. You have we'll take a look at some notes that I wrote. The Fed meeting minutes come out, and you see that there's still a major concern about inflation, and that they feel like the majority of the members at their last meetings, when they did 25 basis points here in the US, the majority of Fed members were in favor of it, saying, hey, there's still work to do. So there's still globally rising concerns over the inflation monster. All right. So if I can move some of my money out of stocks, which are seen as riskier, right? We all know that, into the bond market, right? When you're looking at the full faith and confidence, in this example, is going across the globe, but in this example, the US bonds, and I can get 4.3%, right? Over 10 years, per year over 10, then I'm going to move some of my money and take advantage, right? So the bond, we can talk about bonds all day long, but there's the rise. Now, if you start to get more concerns over global tightening, then you do start to see people, you could start to see people move some of their currency into gold, because it's an inflation hedge, right? Times of uncertainty. So these are some of those times. Right? We are risk off. The markets have been risk off. You saw that kind of tail off, and it's just like there's been those typical monthly reports that we see, those key data points, retail sales. So you'll see a rise and then you'll see a fall, right? When you see something like what has happened recently in China. So you'll get that temporary rally and then you'll see things kind of subside as a result of the news coming out of China. So yes, we have gone risk off, but we'll take a look. We know that the stock market, I felt like it's due for a correction. So we'll take a look at some stocks and things that we have that we have marked up technically to see where we are. All right. So great question, Jeremy. Great question, Reese. So it'll be interesting going forward. But hey, this is what creates the waves in the market, everybody. Okay? We have to just be pros, be patient, and be the pros that we are. So that's that there. Oh, here are, this is an article Fed officials see upside risk to inflation, possibly leading to more rate hikes minutes show, right? So they released those Fed minutes yesterday, and you saw the market react. So I'm going to put this in the chat for people to read. Okay, so I am going to jump over and let me flip my share screen. What I'm going to start doing during the week is, I know we go over these articles, but then there's other articles that I read in addition to what's on trading economics, and I always put notes together. So I'm going to do my best to start putting those probably in the Discord for people to read up on it. You guys think that'll be cool? Yes, no? Some feedback on that. Yep. Okay. So let me go back over. So go back over here and we'll take a look at, okay, cool. So here's some notes that I took in regards to the government bond yields, surge on inflation concerns. So government bond yields worldwide are on the rise, hinting that investors expect central banks to maintain higher rates due to ongoing elevated inflation. Okay. Recent Fed minutes revealed that officials are wary of sustained inflationary pressures, suggesting possible further monetary policy tightening. And then here's just a note, 10-year note, treasury note, a global interest rate benchmark climbed to 4.31, and we see it continuing to rise this morning, a rate not seen since its 15-year peak last October. So European yields also surged, right? This is some of the other data that I researched. The German 10-year bond reached 2.7%. The UK's 10-year gilt hit a high of 4.7%, a level unseen since 2008. So in the Asia Pacific, Australia's 10-year yields ascended to 4.3%, nearing a nearly decade-long high, right? So when we looked at their article saying global bond yields, this is what they're talking. Okay, so the impact on currencies and economies. Higher bond yields typically signal that investors are demanding greater returns to compensate for the perceived risk of inflation. And as a result, countries with rising yields might see their currency strengthen as they become more attractive to yield-seeking investors. Global economies, elevated borrowing costs can potentially slow down economic growth as businesses and consumers may reduce spending due to higher interest rates. Okay. And so then a quick summary, right? Kind of what I do with the newsletter, but I do it throughout the week leading up to the newsletter. So worldwide government bond yields are escalating due to concerns over sustained inflation. The trend suggests potential monetary policy adjustments and has implications for currency valuations and overall economic. All right, so I'll start. I've got some notes here on Australia with the employment data that came out. So I'll post that in the Discord for everybody to read. All right, sounds good. All right. Let's see. Okay. All right, so I'll make sure I start getting that posted in the personal note, posted in the Discord. So back to business. Let's look at the DXY. Okay, so here we are. Right, pushing to the highs. So technically, we've seen this for quite some time, right? Pushed up, and now we're pushing down. We're getting whipsawed a bit. Okay. The question becomes going into next month, like retail sales. We saw a surprise in retail sales, 1% for July. It's going to be interesting next month to see retail sales come out for August to see if things are starting to tighten here in the United States and across the globe for that matter. So we know those reports are lagging. So we'll see, right? That dollar sitting there at that resistance level, right? It's having a little bit of a challenge. We'll see what happens. We'll see what happens with the dollar. Okay, I'm gonna go back to the Forex factory to see, and I know I'm bouncing around. There's just a lot going on. Australia unemployment, see it missed target. I've got notes on that. I'll put that in the Discord. There, that's not good for Australia. And at 8:30, we've got unemployment claims here in the United States, right? So we've got a red folder there expecting 240,000. Let's see what happens. So if we know we've got the DXY sitting in highs, we know what's driving that upside pressure, right? And if it's going to hold here, right, we need a catalyst to get it moving to the downside for at least a correction. So we'll continue to watch that. Any questions on the DXY? Crazy times right now, right? lots going on. All right. Okay. So I want to go ahead and take a look at, since we were talking about the stock markets, take a look at Apple. Right. Big tech player. We can see, right, that decline, right? Reach that peak and we start moving down. The market moves in waves. No worries here from this group. Okay. We know what the deal is. Look at that push. Okay. Look at that push. Just broke that 177 level. If we go here to the 4, you can see how things play out. Okay. You mark it up, let your idea run. Okay. So we're dealing with a different asset class. We're dealing with stocks, but everybody, what is this setup? What do we call it? Somebody, anybody. Absolutely. 80-20. Does not matter the asset class. All right. Do they work all the time? Nope. They work a lot. You have times where, fundamentals, just completely blows everything out of the water and you don't get a correction. Market's making a run. Absolutely. But for the most part, if you're patient, right, because that's ultimately what pays, right, then you can take advantage of these opportunities, right? So that TP2 would be at that 61.8 level. What is that? 172.83, something around there. We might actually get that. Okay. So we'll continue to watch this situation play out, because if the concerns start to subside and the market shifts back to risk on after everybody kind of gets a grip after this week and starts to really digest the situation in China and everything else that's going on, maybe it'll be time to make that run, right? So you see that bond yield going up, all of them pretty much globally, and you see these stocks coming down, okay? You see these stocks coming down, see them declining. Here's Apple on your 1, okay? 80-20 scenario as well, just pushing down, okay? Beautiful setup, beautiful setup. All right, let's go take a look at what do we have on Amazon? What's going on? Okay, since declines, all right, since some declines. If we come into a daily situation, right off that B boundary, right, ABCD waves, right, very shallow retracement on the last ABCD wave. Only got a 236. The bulls are out. Now we're getting some relief. Right? So when you combine what's going on fundamentally with how we view the market technically, I hope it's starting to click for everybody. Okay. That's why we're here. That's why we do these sessions, right? So you can see it over and over and over again. That's what breeds the confidence. Okay. So we see it moving down, correcting. Take a look at the 4. Okay. Moving down. Okay. So we are in an up retracement zone. Okay. We come here to the 1. Look at price retracing. Okay. Declining. Okay. So break those trend lines out. Just let the market. Yeah. Questions on Amazon? No. Yeah. So I had a question. Can you play it off the B boundary? Yes, you can. Right. If that's your thing, you can play it off the B boundary. Okay. So I like counter trend trades in that 80-20 zone back to the 382, but we know the market moves in waves. You can, right? So if you play that, whether you play it on the time frame that you're on a lower time frame, this is the B boundary represents a level of resistance, right? So if you're making those type of plays, whether it's on this time frame or a lower chart, once you identify a new AB boundary, right, you can play that correction, right? Because it's moving in waves to the downside if you want to, right? So your sweet spots for your counter, your 80-20, right? So here, like this. Okay. Right. Say it all the time. Anybody ever used a harmonic scanner? Yes, no? Finding harmonic patterns. Yes, right?
Nope.
Nope. All right. So it's pretty much giving you the same thing, right? If you look at a harmonic pattern, matter of fact, I have my so okay. So, right, these are smart patterns. So if you use the harmonic scanner before, right, you're in essence getting the same thing. Okay. So X to A to B, B to C, C to D. Well, that D represents a completion. Okay. So this is kind of like on a sub-fib type level. So they put that D as a level of completion. So if you've ever used the scanner, it does this, right? So it'll do like this. Okay. See that? And a lot of times people say, well, I don't know about, the counter trend trade or anything like that. But if you've ever used a scanner, that's exactly what you're doing. What does it do? It says what? It gives you targets, doesn't it? It says your target one is what? Your 382. And oftentimes they put your target two at a 61.8. Right? That's what you're doing. Right? So if we who's got a hand raised.
Hey, Benny, that was me.
Yeah.
The target is from that D that's completed down, or
Yeah.
okay.
So what it'll do is it's showing pattern completion, right? So you can see here, we zoom out, and this is why we start out teaching the fib sequence, because that's where all of these patterns, right? So if you get that B point, right, and that pullback from running, let me pull this off. I am going to pull this off because you could be very effective, right, if you understand this. So in order to get these ratios, they're all derived from the Fibonacci sequence, right? You have to get an X to A, and then for a certain pattern to have a certain pattern name, right, it has to meet certain Fibonacci ratios, right? So you can see X to A, that pull back there, right? Then your A to B, and then you have your ratio from your A to B, your C to D. So you pull your fib, right? Pull your fib and get that ratio. Okay, and then it finishes out. So all of your Fibonacci patterns are derived. I mean, all of your harmonic patterns are derived from the Fibonacci sequence. for example, this one here, okay, right? Look at where your target one is. So it has it built in here, right? So look at the target, 382, 50, 61, 8. All right. Okay. Now look. You all see where that stop loss is at? Yes, no? On the pattern? All right. Look. All right. So that's the one little thing Ryan and I discovered, right? We don't understand the sweet spot at the 127. You see how that's why a lot of times when people trade using harmonics, they're like, I can't figure it out. I don't like it because I get stopped out. Well, look where the stop is at. I get stopped out and then the price reverses. That ever happen to anybody that uses a scanner?
Nope.
All right. So here, your stop loss is right at the 127. Oftentimes price will reverse right at that 127. So that's how me and Ryan discovered in our study, right? To move that stop outside that 127. Okay. But all of these patterns, right? If you come here, okay, we just take a broader look at the market. Okay. The challenge with harmonic patterns oftentimes is they repaint and it throws you off in regards to your accuracy. Okay. So if you see here to the upside, you see where target one is at a 382. Right. So just want to show you guys that this morning that what you're learning in essence is really how to do this yourself. Right? Because if we go back and take these off. Right? And how you can get that same type of look, okay, with your fibs. Okay. We teach it the way we do is because we're just looking at it from a larger perspective. So for example, when you get an A, B, C, D move, A, B, C, D, your C becomes your new A, and your D becomes your new B. Completion, right? This is why on a harmonic pattern, you have your entry at the D. Everybody follow me on that? Yes, no? What's up, Joy? That's the beautiful thing about the fibs. So that D is your completion point. That's why harmonic pattern tells you that. Right? So sometimes on your right on some harmonic type scanners, right? It'll give you two entry points, a minimum and a maximum. So in essence, we're teaching the same thing in regards to the concept. So we love that 80-20 zone. Love it. But you got two areas, right? For possible reversal. To the counter. And you just see price is reversing and moving down. So that's how it all works. I don't know, hope that makes sense. So kind of when you learn just how fibs work from the beginning, right? It kind of ties into everything else. All right. Questions? All right. Question. Eloy, you have a question? Oh, okay. All right. So let's keep it moving, right? So we're at the top. I want to take a look at this Aussie Swiss setup. Oh yes, does it work on a lower time frame? Yes. Yep. Reese already answered that. Thanks, Reese. It does, right? Because when you look at the market is just fractal, right? As you move down through the time frames, you still have waves in play. So this is this Aussie Swissy. Not doing anything with this yet. I want to see that trend line break to the upside, start making higher highs and higher lows. But this is how we drew it up. So we push a little bit beyond that 127 zone. And we want to see if we can get some momentum. Right? So again, if you look at the area, right, that counter narrative, right, there, okay, that's just your 80-20 in reverse. That's why we look for that setup. So we're saying, hey, this is a potential low price. We may look to buy, right? This price looks to move higher in the zone before continuing bearish. Okay. All right. So that's where we are on that. Any questions on that Aussie Swissy? Okay. Oh, I went right over that Aussie CAD. Right. We know we've been bearish on it, moving to the downside. And you can see how, right? Price came right into that that daily extension. Right? ABCD. Hey, look. Yes, trading this way requires a lot of patience, right? But it works. We got a 786 pullback, D extension 127. You see that's a pattern right there, an ABCD pattern. It's a form of a harmonic pattern. Okay. So what is this saying? ABCD, our C becomes our new A. Eventually, once we form a low, okay, our D becomes our new B. And we look to play the same game over again. Either an immediate correction to the upside once the new B boundary is formed, or push lower and then a move up, or just continues to move to the downside depending on the momentum. All right. So that's the Aussie CAD from the daily. Here's the 4. Not quite to our 4-hour target yet. Here's that monthly level. Look, we've got a daily D extension that was hit at that 127. Here's our monthly 85.96 support. We've got a 4-hour D extension based on that correction, right? We didn't quite get to a 786 retracement level, so we still expect a 1.618 D extension eventually over time, okay? So if we come down to the 1 and take a look at our smaller waves, and you zoom this out, you can see that we've got a brand new AB boundary, okay? So what is it doing, right? We just talked about there. Price either, once that D extension is hit, okay, and this is a beautiful move. See, we got an ABCD wave, ABCD wave. See, we got a 50% pullback. We expect a 1.618 D extension. That came in right in line with the daily 127 extension. And as soon as the new low formed, after the D extension was hit on a 1 hour, you got a new AB boundary. Our C becomes our new A. Our D becomes our new B. What's the lowest? And now price is pulling back. It's a beautiful framework. There's a rhythm to it. Okay? So now this is pushing up, right? So can you, when a new B boundary forms, can you, right? We've got some folks, I know Reese likes to play the lower time frames, right? Anytime, if we ever send out a setup and it says, hey, we got a new AB boundary on the Aussie CAD, you all should know what to do with that based on your trade plan and your scenarios. So you may get a new AB boundary and you may say, you know what? I like trading on the lower time frame. I'm going to drop when I get a new AB boundary. Okay. You don't even have to use this one if you don't, the 5-minute fibs. You can say, I'm gonna read it off the 1 hour chart. I've got a new AB boundary. Everybody follow me on that. Yes, no? Okay. Those of you who've been with us for a while, we always say, all we really need to do is anytime we get a new AB boundary, post it, right? Post it. It's really good. It's really good practice for all of you. And I'm really gonna get back to doing that because these are where the plays are made. So if I have a new AB boundary to the downside on a 1, you may say, I like trading lower time frames for entry. Okay. Once I get that new AB boundary on the 1, I'm just going to go down to my 5-minute chart or my 15-minute or my 30-minute, like Reese likes to trade. And I am going to see first off that B boundary if price is ready to correct. Oops. Highs are too close. Gotta do that manually. Okay.
I missed what you said, but you said you're going to go down to the 5-minute or 15-minute chart and see if price is ready to what?
To correct off that B boundary.
Okay.
And I'll go back, yeah, because I'll go back and show you again on the 1 hour. Good question. So, right, your idea with your trend lines, right? We don't go through wicks, okay? And you say, once I get a break, I'm gonna look to trade it. Okay? Here. So if I go to the 1, okay, because this represents a reset. So when I get a new AB boundary, the reason why that B boundary forms is because I'm gonna take this out now because we know that's the daily D extension I got. So there's your 1 hour D extension, ABCD. Once the new low forms, right, and we know what a swing low and a swing high is, right, that tells us that we have a new level of support. That's all a B boundary is. So what you're asking yourself is price going to react off support? Everybody follow me on that? Drop me a 1. Okay. This is an area where price can react. Just like down here at this 118, 127 zone, especially after a shallow retracement. Okay. Say we stalled out at that 236 and we move down. This is another area where price could react. That's what these are the zones that we trade. If my bias is bearish overall, and I'm with the trend, I like my sweet spot 61.8, 786. If I start to see a high form in this zone, swing high in this case, and I get a new level of resistance, all right, let's think about what we're doing now. If that forms a swing high in that zone, I know this is an area price may be ready to react. And the reason why we focus on key zones and sweet spots is because if you don't, and you don't have a solid trade plan about the areas in which you like to trade, you will be all over the place. And a lot of times that leads to inconsistency. All right. So you can go once price comes up in your zone. Like for example, here's our previous B boundary. That's a 61.8. That's past structure. If we get up in this area, you can go down to your 15-minute, your 30-minute, your 5-minute, whatever you trade, and you can look for this same type of scenario. We are looking for reversals. Hope that's making sense. Okay.
Yes.
Okay. The market is fractal. So if I wanted to be super granular with everything, I can go to a 15-minute chart, run my fibs and say, you know what, I'm gonna drop to the 5-minute or 1-minute. I got a new AB boundary on the 15-minute. I'm gonna drop to the 5-minute. I'm gonna drop to the 1-minute, and I'm gonna look for price to reverse off that B boundary. Oh, on the 15-minute, I've got an 80-20 scenario. We're in that zone. I'm going to go down to my 5-minute, my 1-minute, and look for a price to reverse, right? Just depends on how low on your time frame that you want to be. So now this price is reversing. So we know overall that the Aussie CAD has been bearish. We are in a down retracement zone. Price is retracing. See? We're making up ABCD waves. Why? Because price has retraced. See, it doesn't look like much here, does it? But this is what we mean. See here? Right? There's waves on your lower time frame. See? Right? So I come in here and do a candle overlay. And I do it for the 1-hour chart. Look. Questions? So this is why I wanted to make sure we cover this lesson. so that we get a true understanding of why we look to trade the areas that we do. Okay. So this is what's happening within those 1 hour candles on your 5-minute chart. So that's why we say it doesn't matter the time frame. If you are a day trader and these are the charts that you like to trade on, you still can take advantage of what we provide. Okay. So you've had 1, 2, 3, right? You're in the middle of your 4th wave on what doesn't really look like much, right, on your 1 hour in regards to the wave sequence. It really doesn't look like much here on your 4. On your 4 hour, you need this 4 hour candle to close, right? Just to get a swing low and have a new 4 hour support. But the more you move down through the charts, you see there's actually a lot that's going on. I don't know. When I first found out, it was so fascinating. Right? Here's your 15, right? Just a larger wave. Right? You just had this D extension hit. When this 15-minute candle closes, this is going to be your high candle. 2 to the left, 2 to the right. That's going to be a new 15-minute resistance level. Okay, if that holds bearish, then what? A, B, C, right? Hit the D extension, your first high, right? After the D extension is hit, boom. That's going to be it. So your new fib is going to look like something like this. So if I'm on this 15-minute chart and I'm thinking, right, this may continue to move up. Well, here's a daily level here. Here's my 382 target here. I'm in a down retracement zone. So I'm looking to trade up to that. Right? So if you like smaller plays, then you may say, if I get this low price, here's the upside target. This is my 1 hour, 38.2 target. See? There's that daily resistance level. Here's my 1.618 extension off of this fib. So if price works its way down into my sweet spot. Okay. May look to want to trade that. Oh. See? Question.
No.
All right. Eloy, elaborate on that. With place smart pattern? What do you mean? I'm not understanding. Place the smart pattern where? Oh, you want me to place the smart patterns on the 15-minute chart? There we go. All right. Different harmonic pattern. Your ABCD wave, right? Where's my tool? It's XABCD, so can't remember where I was going with that. But right, so this is a Gartley, right? Butterfly crab type pattern. Okay, these are different patterns, but your ABCD is a pattern. Okay, your ABCD is a pattern, right? You saw it when we drew it up on the was the Aussie, was it the where's that, right here? See that? That's an ABC, that's a pattern. It's all within the framework if you just commit yourself to it, right? If you kind of just, you know, kind of deprogram a little bit from a lot of the stuff that you might have learned and just take a fresh perspective on it, on what we're showing you, you realize that it's all within the framework. Yep. Oh yeah. And I know that, Eloy, because I went through the same thing. Okay? So in essence, this is the one major classic pattern that we're trading. So for example, okay, if you have, sometimes you'll get a new AB boundary. So think about it. You get a new AB boundary, like so. And then you'll get like a move like this, where you get a bounce, pull back, then a continuation. So in essence, you got the bulls and the bears fighting within the AB boundary. Well, it's all there, right? So look, A, B, C, D. If it doesn't take out the A, it has no choice but to go your way. See that CD completion? You see those targets? We just understand, because we know the Fibonacci sequence in its entirety, that if I get that 786 pullback, then I may blow through all of those targets and go here. Okay. Yep, there you go. There you go. Right. My mentors always taught us, when you start getting harmonic patterns, you get in a fight between the bulls and the bears within the AB boundary. Somebody's gonna win it out, right? You got a correction down. right? Then you got to push up, and then a further move down, the bears came in, but it didn't take out our AB boundary overall. And now it's moving up. And then of course, when it reverses out, right, it's going to make ABCD waves to its target. The market moves in waves. Can't say that enough, right? And so that's why you see when you explode, you know, these patterns on the chart, okay, these smart patterns on the chart, you see them all over the place. Right? And this I've got it at a confidence of 80%. I can move it to 70 and scan, and you see how, look, see? See that there? See that there? See that there? But what's so cool about what we're teaching you is what? All three patterns are all within this CFD move right here, right? Anyway, you're trading it anyway. That's why we don't get caught up in too much mess, right? Because you're trading this. Look, all of these patterns, three patterns, but you're already in that trade on a C to D move. That provide a little clarity for everybody. Does everybody see that? That's the beauty of what we do. You're already in it. Look. Because why? I'm trading the ABCD pattern. Right? Maybe this is extra confirmation for me once it gets to that level. Yep, that's exactly why. It doesn't matter the time frame. See, look, you've got a pattern here. That signaled me, right? Here I've got an exhaustion. I've got a harmonic pattern that formed within my waves, but that just triggered, what is that? That's a move off the B boundary. Look. You're already there. You're already there. That's a correction and a pullback. Why did it give you that? Look, that's right on the nose with the smart fit, that pattern. So it was with my experience. So I went to MTI, studied at MTI, right? I got involved with IML back in the day, right? Because I thought their software was super cool, right? Especially their scanner, I thought it was cool, right? But that's how I came to find confidence and really discover these counter trend trade swings, right? So my mentor MTI taught us about when you get a shallow retracement and that pullback, and that push down to that 80-20, that could be a high probability setup. But it really wasn't until I started playing around with scanners that I realized that, man, with harmonic patterns, right, is giving you the same thing, that move, right? So if I get that drive down, and then I notice like, well, people keep getting stopped out on scanners because the way the scanner is designed is to put the stop right around the 127. But the way I was taught at MTI is that's a sweet spot for a high probability reversal if you get a shallow retracement. So then I continue to build upon that. Right? And then Ryan came in and is big on the research and back testing and things like that. And that's how that came about and how that evolved over several years. It wasn't an overnight thing, but it was that constant discovery, right? That analyzing and readjusting, taking those losses, learning from it is how this came about. So you're already, right? That signaled the pullback. That's correct, right? But because we understand the Fibonacci sequence, I'm going to take that to a certain level on that counter move if I want to do it, but then I'm waiting for a high price to get short. So all of this stuff that's happening with these patterns in between these moves, we're already in it. Look, 1, 2, 3, 4 patterns. We're already sitting short in this position. That's why once I have my aha moments, I really don't bother with anything else because it's all within the Fibonacci sequence anyway. Here, A, B, C, D. D extension was hit. First swing low that forms after the D extension is hit is my new B boundary. A, B, C, D. I don't have to get involved with that. I'm already in the position. Powerful stuff, man. Look, I'm already short. I already know. Yes, I just came into, look what happened. See that? I already know I just hit a target from the daily. If you trade this setup, you just got stopped out. Yes or no? If you trade, if you trade this the way this is traditionally set up on this pattern, that reversal, you just got stopped out. Right? So if you're playing that, you place your stop here. Why? Because we understand that it's not just about fit retracement levels, it's about the extensions. So this would be my setup. That's an 80-20, right? That's an 80-20. So I either take this down to the lower time frames, right? Like we did, and we play this move to the upside off the trend line break. If you play this down on the lower time frame, so you identify that opportunity. If you drop down to your lower time frame, then you put your stop below the low. If you want to play it tighter, you put your stop below the low of the trend line break, before the trend line break, here. The last low prior to the trend line break. If you take that setup that you identify from a higher time frame and you bring it down, you can do that. Why? Because in essence, I'm really putting my stop below the A. Here's the trend line break, here's the pullback, and we're off and we're running, okay? If you plan it just straight up off of this pattern here, I'm putting my stop here. I'm either waiting for a low to form and putting it below the low, which means on a 4-hour chart, I need this candle to close out, but that trade can be off and running. If I'm willing to trade smaller, because I divide my risk by my stop loss, I put my stop loss at the extension. If it doesn't hit the extension, it's pulling back. Right? It's gonna pull back. Okay? That's still active. Okay. Or you say to yourself, knowing that you understand not only retracements but extensions, you say to yourself, anytime I get a harmonic pattern to form, I'll wait. I won't trade B boundary scenarios. I'll only take this position if it comes down to the 127 and holds. In essence, kind of the same thing that you're doing on the lower time frame, right? So harmonic pattern forms, which is really, look, A, B, C, D, my C becomes my new A, my D becomes my new B. It's the same concept, everybody. That's why we teach it like this. So you could say harmonic patterns, I only trade them if I get it to push to the 127. If it pushes to the 127 and forms a low and breaks the trend line, I'll take it. That's how I would play those. If I'm not going down to the lower time frame to catch it. All right. So anytime you see a setup come through on the Discord, and you see a setup, right? A lot of times we'll post it because of the time that we catch it is at an 80-20 and we'll put it in, or it's at a 61-8 and we'll put it in. But if you ever get a setup like this, and it comes through and we draw it up, this, like that, you should know what to do, right? If we post that, you should know we've got a new AB boundary, for example, on the Aussie CAD on the 1 hour chart. That should be all you need, right? You should be able to go through the training and you should be able to say, well, what's the directional bias on whatever this pair is? Say, for example, we know our bias has been bullish on a particular pair. Okay, I got a new AB boundary. If you see this come through like this, you should know, right, that it's a new AB boundary. I'm in a potential up retracement zone. I have an opportunity either to counter trend trade this off the B boundary, or I'm sitting waiting. If you say the only counter trend trade I like is at 80-20, then you know, hey, they send me a trade I did with a new AB boundary. In my mind, I should go, okay, I'm in an uptrend on this particular pair. I'm either gonna play an 80-20 on this if price reaches that zone, back to the 382, right? Or I like playing the B to C move. So I'll look to trade B boundary to the 382, or I don't like none of it. What I want to do is, because it's an uptrend, I want to wait for a low price in the sweet spot zone. Because I only like to trade with the trend. So I'm going to wait for a low price, put my stop below the A or below the C once it's established. And then I am going to look to get long. That's all you need. That, ladies and gentlemen, is why we say a new AB boundary is like the bat signal from Batman. That's it. If you see that come through, your eyes should light up. You should journal it, do whatever it is, and say, oh, I got a new AB boundary on the 1 or the 4. Then it comes down to, well, what chart do I like to trade on? Well, they send out a trade idea on Discord for a new AB boundary on the 4. Well, I only like trading the 1. The 4 hour is too slow for me. So I'm going to pass on that trade idea. Everybody follow me on that? Drop me a 1 in the chat. Okay. Because that forces you to think and ultimately become a very, very dangerous trader in these markets. That's it. Ryan just posted this setup. Benny just posted this setup, right? We got your back, right? Your eyes on the charts. Boom, there's the setup. That's why we refuse to send out, here's a TP, here's a stop loss, this and that. That's it. Like, this is it. This is why we wanted to create a group, right? To actually teach people how to learn how to trade. You do the training, which we're almost done upgrading. You do the training, and then you either show up to your live sessions or watch the recordings, right? And then you see the setups in Discord, and you know exactly what you want to do based on your trade plan. Questions, thoughts, concerns, any light bulb moments? It does. And you posted earlier, Reese, about, I saw that, I meant to work my way back to it before I got deep into the lesson. On the one, right? We know we're uptrending overall, but the market moves in waves. This is most likely not going to move 1,380 pips without a correction. Here. And this is what, yes, I like AB boundary on the one and use the lower levels. Yep, to enter at the sweet spots. It's a great idea. So this is what Reese is calling out. Look, see how that's turning over? Okay. So that just formed a high like this. Like so. Okay. So I am going to pull this level down. Okay. And that was saying, look at that on the 15. So if I'm using that 1 hour, I could take this off on the 15. And I could say here, I could trade it like this. Pull this off. You can see I'm using that 1 hour fib as my mother chart. Here's my 382 target. Here. Here's my 61.8. Here. So those are some downside targets. Why? Because I'm in an 80-20 zone and I know there's a possible chance that price could correct. Right? So now that I have those higher time frame targets, I can say, I want to see if my trade idea is going to play out on the 15 or on the 5. Right? So, boom. Okay. Can you have a more aggressive trend line on that? Yeah, have an aggressive in the trend line because we want to try to track price through its highest point. 1, 2, straight through. Boom. Okay. This is your main trend line here that has been broken. So now, because I know on my 1 hour chart, I'm in an up retracement zone. I'm coming out of the 80-20 zone from the 1. It's already taken off on me. I just came into a de-extension. So listen, it's the same game. If this is going to continue to move down and I want to follow, say, my trade plan, this has already made an ABCD wave. Look at the pullback. Just about a 61.8, boom, 1.618. So guess what? That fib is no longer highlighted. Why? Because an extension was in. So what we need is a new low to form. That's going to give us an AB boundary. Now, you've seen this on the daily. You've seen it on the 4, the 1. Now we're on the 15. Once that low forms, wherever it's going to form, I've broken an inner and an outer trend line. I would love to see this pull back. Right? Like this. And then move down. So in essence, we can give you this it's the same thing. So if I get a new AB boundary here, so say you saw this come through the Discord on the 15th, new AB boundary, okay? All right, hasn't formed yet, okay? And this is another issue with scanners. is that it's automatically gonna call that, but you don't have a swing low yet. So if anybody's ever used a scanner and you're like, why does it keep redrawing the pattern? It's because it keeps extending it until it finds a swing low. So it'll start a pattern here, and this might be a Gartley. And then it keeps extending, and it might turn into a bat. And if it keeps extending from there without forming a swing low, guess what? It just closes out the pattern. It's a failed pattern, right? So we don't have a swing low here yet. So all those little nuggets, right, that a lot of times people pass over, especially in the beginning, it's a solid foundation, and you should really pay attention to, right? So once that swing low forms, we get a new AB boundary. If you've seen us post in the Discord 15-minute new AB boundary to the downside like this, and you saw, right, a drawing come through like this, right? You have to be able to look at your charts, because we mark our charts up every week. And you have to know that this is moving down to the targets. How do I want to play this? Do I want to play a counter trend trade scenario on a smaller time frame? Or do I want to wait for the high price and then move short to that target? Okay. Once we alert you, right, with the trade idea, use your education. That's it. And you do the same thing over and over and over. Oh, Randy did. I'm sorry. My bad. My bad. Appreciate you. Thanks, Reese. Yep. It's good looking setup there. See if there's some follow through. Right. But there's some people that trade that lower time frame. They've already made their money. They're gone. They're gone already, right? They're not even concerned. So Donette, I understand you on that. All right, like the AB boundary in 1 hour, use the lower time frames. That's nice. That's a nice plan. Any other questions? Nope. We're good. All right. Hope this helps. For the stochastic setup, okay, I can show you. There's no training for it, but I can show you. We do screenshots for it. I can let you take a screenshot. That's a good idea though. Video. We need to do that. So let me get you set up here. So that's your top part there. Got it? Appreciate it, Michelle. Thanks for being here. All right, Elo, you got it? All right. Well, that's it. Well, we're going to wrap things up for this session. I wanted to make sure, amidst all the chaos in the market, that we did a little bit of a review today. so that we clearly understand what we're trying to do. We're posting setups and what we're looking at on a daily basis here. So with that being said, hey, everybody enjoy the rest of your day. Enjoy your Friday tomorrow, and we'll be back at it on Saturday going hard, right? Finding the setups for the next week. I will post some of those fundamental notes that I had in the Discord, and we'll keep it moving. Have a great day, everybody. You're welcome.